Yes. Hello, everyone. Another video here from the Tokyo Real Estate Man. And I got an interesting email today. There's a guy, his name is Mike Swanson, and maybe you investment heads. He's had a site for years called Wall Street Window. And I've just really followed him for probably about 25 years right now. And then he had an interesting email today. He's a bit of an anti-Bitcoiner, and he just looks for a market. He's a really kind of invests like I do, which is a person who looks for market sort of arbitrage. And he ended up sending, I get his daily emails every day because he notices interesting trends in the market. He doesn't always, he tells his subscribers generally before this, but generally speaking, after a trend is sort of establishing itself, he starts to share a little bit. And he sent this email today, which is about, what did he say in the email? It's like there's a certain Asian market breaking out here, and he's looking here at the EWJ ETF for Japan. This is basically the Nikkei topics, I guess. So you could call it the Nikkei Heikin or the 225. And I've followed the Nikkei 225 for years, and I used to actually trade it for about 5 years. I used to trade the banking sector, and but this, of course, is the average. And this chart that Mike has provided here is basically from, I guess, April of 2022. So you see the grind down, I guess, here during, and then the push up from October of 23. And then it's his opinion right now that the Nikkei here is consolidating right now, and he's interested in getting into it. And he's interested in a two-way trade. It's really impossible for me to do the two-way trade because this is the yen US dollar. Because I've had to ride this all the way down. But he's also looking at this chart, and it's his sort of idea that the yen is actually bottoming right now against the US dollar. I guess in relation to the Canadian dollar, we saw a peak of around 120. And I know that this morning it's about 105, so it's pretty well getting its way back to near sort of a parity trade like this. And I guess if who knows what really happens. I really feel out of control with all this all. If the interest rates, I guess, for the US dollar were to go down, who knows what's going to happen. I don't feel or pretend to know that I know what's going to happen with it all. That maybe I think it's at 149 today, the yen. Maybe the yen will make its way back to even firstly, I guess the 140, 139, and then we're lucky to get back into the 120s. That would be good. But the one that interests me more is this one right here, which is the Nikkei Heikin chart right here. And I followed it for years, and I will bring up another chart here if I can get the. Uh, okay, am I following this right here? Tab on. And I'm going to try to move over here to another chart here. This one here on, and this is an older one, but this is a chart that I used to get this mail from this real estate company in Japan called Land Net, and I'm out of Japan right now. I'll be there next week, but hopefully I'll be able to get an updated version of this chart. And this is the bottoming of the Nikkei in about 2002. So I ended up in the Japanese real estate market here from the mid 1990s, and we've had a total run up. But what you're seeing here in the black is you see this Chuko Manchin Seiyaku. This is all the contracted sales of properties, okay, and this is the average of everything, and this is for Tokyo from, I guess, 2002 to about 2020 right here. So what you will see is that and this is, of course, the entire Tokyo city average, okay, not uh, not the central five wards. The central five wards uh, tends to be more aggressive than this. This is more of definitely an average, and you'll see though the Tokyo average follows. The red chart here is, you'll see right here. This is here the Nikkei Heikin Kabuka. Okay, and you'll see for the most part the Although the Nikkei in red is a little bit more volatile than the condominium price right there, but the land price generally does follow the Nikkei, and especially in the central 5 or 6 wards of the city. So I think what this is indicating is that the price of the Tokyo Central real estate, I think, is at a again another sort of inflection point. And if the Nikkei does break out and break into new price discovery and new price territory, I think that uh, all these non-colored red dots are just going to be going up in price. I think that this real estate, especially here in the center of the city, right, is going to rip on higher. And as that rips on higher, this stuff here to the side, of either side of it, as I move here to the side, it should sort of have some more supply should come up. More of this, the deals and stuff like this in this area is now going to get more expensive as well. Anyway, that's a little thing to watch. I'm not saying that's necessarily going to happen. However, I did get that email today, and I did go for my morning walk. And I was just thinking about it because I've watched this relationship for about 25 years. So as to whether it'll happen, I really don't know. I really don't know. But it is sort of a trend that's continued to sort of happen over my lifetime. Anyways, another video here from the Tokyo Real Estate Man, just talking a little bit about whether the Nikkei Heikin will break up, which is basically the price of the Japanese capital markets in relation to wages, and indirectly here in this video talking about the price of the best land in Japan in relation to the Nikkei Heikin over time, as expressed through the charts by Land Net. And if that trend was to follow, these prices, or these land prices in Tokyo, will go up as well. And it looks to me as if this inflation in Japan is sort of continuing. Anyway, another video here from the Tokyo Real Estate Man. いつもこのチャンネル見てる皆様、本当にありがとうございます。この動画でもう終わりです。はい、すいません。